Welcome everyone in this video. XRP coin is the bottom price here. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. The rising trend shown on the chart was initially a clear indication of a hopeful and positive outlook among market participants. This trend typically suggests that the price is moving strongly in a particular direction, namely upward, and that buyers are in control. During periods when a rising trend is in effect, buyers generally expect the price to continue upward, creating a stable and optimistic environment in the market. However, every trend has an end, and when this rising trend eventually breaks, it becomes a significant event for many traders and investors. Such breakouts, especially in this context, may signal a turning point in the market. The break of a rising trend often leads to a downward price movement, and when investors panic and start selling, it is closely watched by many strategists and traders. However, if the price attempts to climb back above the broken trend line, this becomes an important signal. It could suggest that the general sentiment in the market hasn't completely soured and that the price is actually approaching a bottom. For investors, such levels are typically seen as opportunities, as they often offer a chance to buy at lower risk levels. This situation marks a critical moment that should be closely monitored, as the price attempts to break above the broken trend. If the price pushes strongly above the rising trend, this may indicate a market recovery and suggest that the previous downward movements were temporary. Furthermore, the attempt to stay above the trend line could mean that this level has now turned into a support point, indicating a potential market bottom. Investors, if they assess the situation correctly, may be able to catch a potential upward trend. If the price successfully breaks out of this level and stays above the trend, investors may determine that a bottom price level has formed. This would suggest that the price has started to recover from its previous negative movements, and that this level is near one of the lowest price points seen previously. In technical analysis, when prices repeatedly move within specific levels and then return to those levels to take support, it often signals that these levels are critical points. Therefore, investors might consider this level as a bottom price and expect upward movement from here. On the other hand, if the price falls below this level, it presents a different scenario. If the price moves below the level again, the previous declines could continue, signaling further weakness in the market. However, if the price moves above the broken rising trend, this could prevent that possibility, solidifying the market's foundation. In this case, investors should closely monitor the reversal and enter their positions with proper timing. In technical analysis, breakout levels and bottom points are crucial because they often represent critical moments for either a trend reversal or continuation. Properly assessing these levels is key to capitalizing on potential gains. Thus, the price's effort to rise above this old trend is not just a reversal, but also a sign that the market is beginning to recover. In such cases, investors can take advantage of the current market conditions by using opportunities effectively rather than taking on more risk. If the price breaks above this level and maintains that position, it could be a very important signal for investors. This could indicate that the old trend is resuming, and a strong upward move in the market may follow. Additionally, moving above the old trend shows that previous obstacles and resistance points have been overcome. Investors might interpret this as a break in an old resistance level, signaling the potential for a much larger upward movement. However, it's important to remember that focusing solely on trends isn't enough. We must also pay attention to other metrics. Keep watching. The Elliott wave theory suggests that markets move according to a specific pattern and structure. According to this theory, price movements generally follow a five-wave pattern. These waves have a distinct sequence, indicating both upward and downward trends. The first wave in particular represents a strong upward movement in the market and is often seen by investors as the beginning of a trend. However, the correction that follows the completion of the first wave is also very important and plays a key role in determining the market's direction. The second wave of the Elliott wave is the phase where the market begins to correct, with the price retracing a significant portion of the first wave. This corrective movement is a process that investors should watch closely. The second wave typically does not retrace too deeply, but moves back to a certain level before beginning another upward movement. The depth of this correction is often related to Fibonacci levels. Fibonacci levels are very important tools for investors because price movements tend to retrace according to specific mathematical ratios over time. The 0,618 and 0,786 levels are particularly considered critical during the second wave correction. These levels are significant points where investors may decide to buy or sell. If the price retraces to these levels and finds strong support, the market is expected to move upward again. In this case, a price rebound from these levels and a subsequent upward movement could present significant opportunities for investors. Fibonacci levels are typically used to predict how much the price might retrace, and investors pay close attention as the price approaches these levels. The 0,618 level, in particular, is considered a key level by many investors. In many markets, after the price retraces to this level, a strong recovery movement can begin. The 0,786 level is seen as a deeper correction, and recoveries from this level usually signal the start of a strong upward move. After the price retraces to the 0,618 or 0,786 levels at the start of the second wave, it could initiate an upward movement. This is a strong sign that the market is gaining upward momentum again. Investors may choose to buy at these levels and anticipate the development of a strong upward trend. Moreover, the recoveries that occur after these levels are usually longer lasting and more sustainable. As a result, investors may have the chance to make significant gains in the later stages of the market. After the completion of the first wave, how the second wave correction unfolds plays a crucial role in investor strategies. If the price touches one of the Fibonacci levels and reacts from there, it is often seen as a strong buying signal. The market would then experience a recovery, setting the stage for the third wave. The third wave is the strongest wave in the Elliott wave theory and typically includes the largest price movements. Therefore, targeting the third wave can present a significant opportunity for investors. A strong rebound from the 0,618 level can be considered a healthy correction for the market. A powerful buying signal from this level could prompt investors to act, signaling the start of a new upward trend in the market. Once the second wave ends, the third wave typically follows as a strong and promising move. There is a noticeable downward trend in the RSI indicator at the moment. This declining trend creates a structure that limits the downward movement of the price and forms a certain resistance level. RSI is a powerful momentum indicator that shows overbought or oversold conditions in the market, and it is also used to determine the direction of the trend. The current decline has continued to a certain level, but if this trend is broken, a significant shift in the market could occur. If the price manages to break this descending trend in the RSI indicator, it would signal a reversal of momentum and the start of an upward movement. Such breakouts are typically seen as a major turning point for the market and can create opportunities for investors. If the RSI breaks above this resistance trend line and starts moving upward, it would be interpreted as a positive signal for a rise. Specifically, if RSI breaks through this resistance and moves higher, it indicates that buyers are taking control of the market and the market is beginning to shift upwards. Breaking this level in the RSI indicates that the negative momentum in the market is starting to reverse, and prices could initiate an upward movement in the short term. This kind of breakout is generally seen as a sign that momentum is changing, and investors are beginning to take long positions. This could trigger further upward movement in the market and increase profit opportunities for investors. Investors may choose to buy as they track the RSI breaking the downward trend and starting to move higher. Additionally, this breakout in the RSI indicator could mean that the trend's direction may change, and prices could rise to higher levels in the long run. A move to higher RSI levels suggests that the strength in the market is increasing, and the upward trend is beginning to solidify. Once the RSI breaks this trend, the price will likely move above the previous rising trend. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.